Hello again, I'm Toni Henneman, staff of the Local Government Interim Committee. In this video, I will cover some of the major changes that have occurred to the Entitlement Share program since its inception in 2001. If you haven't already, I recommend watching the first and second videos since they offer more background and explanation of the program itself. This training will focus exclusively on a high-level overview of changes to the program. For further explanation on any of the areas discussed, please visit the additional written reports posted on the website. So one of the areas of entitlement share that has seen probably the most revisions is the growth factor. Arguably, determining the growth factor is difficult because it attempts to offer equity and adequacy of revenue sharing between the state and local governments. So to begin, let's look at an overall graph chart that shows the growth rates over time since fiscal year 2 until 2021. Now, there are some anomalies in this graph, some peaks and some valleys that are definitely curiosities, and I will cover those here in a little bit. I want to start at the beginning, however. Let's go back to the original growth rate, and this was the growth rate that was implemented in House Bill 124. Now, I'm going to briefly go over this twofold because it is fairly dense, and second, because it's technically not the growth rate that is currently in statute, so I will kind of breeze through it. So the growth rate was used two factors to determine total entitlement share pool growth rate. Now here I want to explain very quickly that the entire entitlement share pool is important. So that's all of the monies that will eventually be sent out to counties, cities, and consolidated governments. It is actually grown as a aggregate total as a whole. It is grown by a growth rate, and that growth rate is determined using the Montana Gross State Product and the Montana Personal Income. Now, again, the idea was to try and align that growth rate with some economic indicators of the Montana economy, and that's why those were used. Now, once that factor was used and determined for that entitlement pool growth rate, then individual political units' growth rates were determined by additional two factors. One, it was determined by type, so counties, cities, and then consolidated governments grew by different growth rates. And then also the population of the individual political unit, determined just how much money each individual group will receive. So again, that was a very quick overview, and again, we're going to move forward to the growth rate that is currently in practice. This is the growth rate that was used in 2004 to 2011, but please, if you want more information on this original growth rate, please grab the written document that is on the website that walks through this original growth rate at more depth. So this graph is just the beginning of that full graph that we looked at. This just shows how that original growth rate grew. So technically, you can easily assume that it was kind of on an upward trend there. And you see three different lines on the chart because it's broken down by cities, consolidated governments, and then counties. Again, they grow at different rates, as was mentioned on the last slide. So let's go ahead and jump into how the growth rate works currently. So a new growth rate was implemented in 2011 in House Bill 495. This growth rate still uses two factors. They are just different than the earlier. So the first factor is the total amount of alcohol, gaming, and vehicle revenue that's brought in across the state. And the second factor is the individual and corporate income tax revenue, again, for the whole state. Now, factor one is important here because those are the actual revenues that the state assumed because of entitlement share. Those are the revenues that are, quote unquote, in entitlement share. So tying the growth rate closer to those actual revenues, I think the theory and the idea was to make that grow at a more relative rate that those revenues would have done if not for entitlement share. So when you have the two factors, they are actually collected for the past 3 fiscal years, and then each factor is determined as a ratio. Now, I don't want to bog down too much in the math here. The ratio is used just to account for the most accurate average that could be possible using those total revenues from the last 3 years. So once there is a ratio determined for each of the factors, they're weighted differently as well. So factor one is weighted at 75% of the total. And again, this is because those revenues are the ones that are the dedicated revenue for entitlement shares. So they are weighted fairly heavily. To determine your F1 weighted value, you take your factor 1 ratio and multiply it by 0.75. Factor 2 is weighted at 25% of the total. And again, same calculation, you would multiply your factor 2 ratio by 0.25 to arrive at your weighted F2 value. To find your total final growth factor, you just add your F1 weighted value and your F2 weighted value together. And again, I know that there's a fair amount of math here, but as long as we kind of can see the revenues that are included and used to determine growth rate is what's important here. And sometimes it's easier to see this on the ground in real life. This is an example of the completed growth rate calculation for fiscal year 2021. This is taken from a memo from the Department of Revenue to the Montana Association of Counties and the Montana League of Cities and Towns. This comes out each year and is kind of walks through the calculation of how the department arrives at their growth rate calculation. So in that first column there, you can see, or second column, technically, you can see the revenues for the first factor, alcohol, gaming, and vehicle fees. And again, that's total statewide revenue. Third column has the factor 2, individual and corporate income tax, again, total across the state. You come up with your ratio, which is below that, the non-weighted ratio, and then you weight that ratio, multiplying by 0.75 if it's factor 1, multiplying by 0.25 if it's factor 2, and then finally adding those both together. For fiscal year 2021, the calculated growth rate is 5.4%. Now here it's also good to note that House Bill 495 also added caps to the growth rate. So an upper cap means that counties, consolidated governments, and cities cannot grow above a certain percentage, but it also added a lower cap, meaning that a local government could never grow negatively. Now, if we go back to the 2021 example, the, again, calculated growth rate was 5.4%. It exceeds the cap that are highlighted there. So for 2021, counties, consolidated governments, and cities and towns will receive a 3%, 3.25%, or 3.5%, respectively. So if we pull that chart back, let's look at the full picture here. So from obviously fiscal year 2002 to 2011, that was that original calculation. In 2011, it was changed. But the big anomaly here is what happened in fiscal year 12 and 13. We see that there was a 0 growth rate. And that's because House Bill 495 also eliminated the growth factor in fiscal years 12 and 13. The new calculation with caps was applied in fiscal year 14. Now, the other valley that's of note is in fiscal year 18. So in the 2017 session, House Bill 565 set the entitlement share growth rate for all local government entities at 0.5% for fiscal year 18 and 1.87% for fiscal year 19. And then growth rate calculations will be restored in fiscal year 2020. So while there's probably not enough data to give an accurate trend, looking at how local governments were all at their cap from fiscal years 14 to 17, and then it looks like with 20 and 21 that they are going to be approaching that cap again, and so it might be an okay assumption to say that they probably will usually be at that cap that is statutorily allowed. So again, growth rate is the part of entitlement share that has seen the most change, and there are a lot of factors that go into it, and there can be more discussion. And again, I would say if you want to learn more about growth rate, please see the written documents as well. The other topic that was brought up this interim in the Local Government Interim Committee was House Bill 33 from 2015. We had some local government representatives that were very strongly proponents of getting more education about this bill. And the Local Government Committee agreed that it was an important bill to discuss at more length. So we'll go back to 2005, and this bill, to give some context, it's going to sound like it has nothing to do with entitlement share to begin with. We will get there, I promise. So House Bill 33, was introduced by the Children, Families, Health, and Human Services Interim Committee. It was part of a suite of bills that were trying to combat mental health issues across the state. This one specifically looked to expand mental health crisis intervention and jail diversion services to areas of the state that lack services. Now, the key here is that it's expanding health services, probably going to cost some money, so it did have an appropriation in the bill. If we look at the action on this bill, a couple things might pop out right off the bat. The House actually passed this 100-0. It came out of Senate Finance and Claims, again, 19-0, so it was very strongly supported early on. Senate also was fairly supportive as well. It flew through to the governor, and then the governor added amendments. And the House adopted those governor amendments, but then the Senate chose to not adopt the governor's amendments, 50-0, overwhelmingly. So then we go to quite a few actions here. Now I want to point out the timeline, and this is somewhat significant. So if we look at, there's a lot of action between April 23rd and April 25th. And additional context is that the legislature will actually move to sine die on April 25th. So a lot of this action is happening within the last day and a half to 2 days before the end of the session. So since the Senate does not concur with the governor's amendments, the bill goes to a free conference committee. There are a couple amendments added. The ones that I want to focus on are one amendment, actually, that was added on the afternoon of April 24th. So this is where entitlement share becomes a player in this bill. So this is the version after that free conference committee. And if you look at the the underlined red text, it says reducing local government entitlement share payments and certain calculations for the purpose of providing funding. And it also then brings in section 15.1.121. So 15.1.121 is the entitlement share section. So bringing in this section does multiple things. One, fairly innocuously, it makes the bill quite a bit larger because the 15.1.121 is a long section. And this is just a screenshot from the bill, again, from that 15.1.121 section, subsection 3. And this is what affects entitlement share. There were 2 actions that were taken. First, the fiscal year 16 pool was reduced by $1.049 million. And secondly, the base component for calculating subsequent years' growth was set as the prior year, and that's done in subsection 3A. So technically what that second action does is it makes it the fiscal year 16 payment will be your base for fiscal year 17. Now if we just think this through, 16 payment was reduced by more than $1 million, which would then make one assume that probably that 17 payment is going to be lower as well because it can only grow off of the 16 payment. So let's look at this as a flow chart. It might be a little bit easier. So the funding for community crisis and intervention jail diversion services were done in 2 bills in 2015. Ultimately is going to end up with a $3.7 million appropriation through the state. So House Bill 2, it appropriates $1.7 million. And then House Bill 33 asked for a $2 million general fund appropriation. Now, the April 24th Free Conference Committee amendments actually change up how that money will be found in the general fund. If you think about it, these amendments kind of help backfill that $2 million that would come out of the general fund. So half of that was found by just cutting the fiscal year 16 entitlement share payments by that little over $1 million. And then the rest of the $2 million will probably come from that action of making the fiscal year 17 base component equal to the prior year. So again, that's harder to nail down specifically, but one could assume that it will get you close to $1 million reduction. So those two together, again, get you close to that $2 million of general fund for the biennium. So you add the House Bill 2 and the House Bill 33, that's where you end up with $3.7 million. So let's look at how this actually affected local governments on the ground. This is taken from a Department of Revenue memo regarding entitlement share payments. And this comes out every year. Again, just shows exactly what each local government will receive for entitlement share. Now, this third column actually lists out the House Bill 33 reductions by counties, cities, and then consolidated government. And you'll notice there on the bottom, the total line is that very common, or I guess familiar by now, the $1.049 million. So again, this technically just cut each of those groups, local government groups, respectively. And the representatives that expressed, I guess, maybe the most heartburn with this bill were the cities and towns. Now, if we look at it in relation to the other types of local governments, cities actually bared the largest burden of this cost. And additional context, before 2015, this crisis intervention and jail diversion program was mainly done between counties and the state. Counties had been, contributing to this program before, but cities never did. And that's, again, why I think cities became a little upset with this, because now they were having to kind of carry the burden of a cost that they didn't usually have to carry. And that's kind of the only way that it could be done, because entitlement share pool affects all types of governments, and it would be really hard to cut the entitlement share pool without affecting all three types. So again, in summary, House Bill 33 was one of the only changes to entitlement share that did this kind of action where a chunk of change was cut from the entitlement share pool. And I believe that's why the local government representatives did really want this included in the training and wanted other legislators to be aware of what happened in 2015. So again, there's a lot of information about entitlement share. Please feel free to reach out to anyone in the Legislative Services Division or Legislative Fiscal Division. Both divisions have produced a lot of material and resources related. If you have any questions, please feel free to contact me at 444-3593 or email, which is listed on the screen. And again, please visit any of the documents that are posted on the website as well. So thank you for your attendance.